market bottom in? Are we headed to new all-time highs? I'm going to cover that all here today in this video. So jumping right into the charts, you can see that SPY has had a strong bounce. This was back from the start of last week on Monday, January 13th. We had a reaction off this lower trend line. You can see that we bounced from there. It was also after we filled this gap that was formed originally back on November 15th. Buyers stepped in and we had a strong reaction and gap to the upside on CPI. And since then, we've been pushing higher ever since. And now that Trump's in office, he just signed a $500 billion AI infrastructure bill with Microsoft, NVIDIA, and Oracle. So we'll see how things trend. There's a few things to look out for, of course. SPY now is heading a bit higher. There's some resistance here between 604 and 605. And tech, if you look at the Qs, they are still actually under pattern, but if you look at the NASDAQ, it is actually pushing over. So that's all bullish confirmation. We are breaking out currently. It seems to be risk on, but there's a few things to look out for because Trump now is going to tariff both Canada and Mexico 25% on February 1st, as well as potentially China 10%. And later this week, we do have the Bank of Japan interest rate decision. They are likely to raise rates. This will happen on Thursday night, so we'll see that in the markets on Friday. And then next week, we do have the FOMC decision as well for the interest rates, and we'll get some more information from Jerome Powell. The future, how many rate cuts do they expect the rest of the year? Right now, the market's pricing in the first rate cut in June, and yields have dropped quite a bit last week from CPI data. So you can see that we've had this rolling over of yields. We're starting to bounce a little bit. Some data has been coming out with like Redfin. The median home price went up 7% in December to $428,000 is the median home price. And you need $117,000 in annual income to afford the mortgage on a house of that price. So still some inflation out there. Tariffs are expected to cause some level of inflation. So I do expect Jerome to mention that in the FOMC meeting next week. And of course, with the Bank of Japan, you saw how we sold back in August. Back in August, we had this drawdown from the carry trade between Japan and U.S. tech stocks and the difference in bond yields. But I don't know if we're going to have as much of a reaction like this time around, just because it's already happened. So I don't really expect to see too much volatility. It'd be great if we did, because I'm still net short the market, and I'll talk a bit about that in a second. But just want to cover a few different stocks that I have. So I'm looking at NEO and Grab. NEO unfortunately didn't participate today because Goldman Sachs continues to downgrade this stock. I don't know if they're short the stock or they want the price lower for themselves, but all the other tech EV companies rallied about 5 to 6%. NEO was even up 5 or 6% in overnight trading until Goldman Sachs dropped the downgrade, and then we had this push to the downside, so we're not winning there. Grab is an interesting one. It did fill this gap that we had previously, and we are bouncing from that level. We'll see if we can actually break above this lower trend line. If we can break above that downtrend, that'll be bullish confirmation, and we can have a stronger push back over $5. There was also a $200,000 call option buyer I saw on the flow for 5C at the end of February. So we'll see if that can carry over. We do have earnings coming up on the 20th. I really like this company. We'll see if we can get that push to the upside, and that's one of our big positions as well. Another thing I want to take a look at is VIX. So VIX has really drawn back a lot. So we keep coming down to this like 15 level on VIX, and that level has acted as support a few times. VIX moves on average inversely to the stock market as well as risk assets. When VIX comes down, typically the market floats higher. And that's what you've been seeing here, right? So VIX was at around 21 and it's been just draining and draining and draining. And you see here on like a 15-minute chart, it kind of has this swooping move to the downside. And now that we're back at that 15 level, that kind of puts a cap on the market to some extent. It's not going to move up as quickly as it did over the last week because as volatility unwinds, you have that stronger push on the SPY, right? So we'll see if this level can hold it. If not, then we're likely to just maybe we go sideways for a bit. That would allow SPY to gradually push higher. But ultimately, if this ever drops back down to this 12 to 13 range, that would be a good position to buy call options on the VIX or VXX or one of the other ETNs or ETFs that track the volatility. So that's something to look out for if we ever get back down there. You can see that level, we don't usually stay down there for that long, and we'll have a push to the upside. So that's what I'm really looking for as well. Of course, after tech earnings and FOMC and everything is out of the way, then it's a much safer period for you to pick whether the market decides to head back lower or push to the upside. We'll see how things trade over the next coming weeks. But I wanted to just hop in the charts here and give you an idea of what to expect. We'll see if we can break all-time highs, but over the next week, 2 weeks, there's just going to be a lot of information. And then after all of that information is digested, we'll make a decision if we will continue higher or if we will continue lower. So stay safe out there. Play some earnings if you want. It's mostly a coin flip. Whether the company actually beats earnings expectations or not, it could still sell or push to the upside. So just stay safe, size small, and I'll see you in the next video, guys. Peace.